From 2018 to 2020, the world was obsessed with trade wars and bringing manufacturing back home. While everyone was watching these political headlines, the real story was happening in the shadows. Global investment giants were quietly moving a staggering $1.4 trillion into emerging Eastern markets. This happened in 2020, right at the peak of all that tension. Some people might call it a coincidence or maybe even bad timing, but for those who understand history, it was a completely predictable move. You see, history shows us a clear pattern, a cycle that's been repeating for over 300 years. Once you grasp this cycle, the future of global economic power becomes crystal clear. It works like a four-stage machine that has shaped every major global reserve currency. Stage 1. Financial masterminds create a centralized system to control money and credit. Think of it as installing the financial plumbing for a nation. Stage 2. This new system is used to finance massive government expansion and public projects, or through debt. This period usually feels like a golden age, an economic boom where prosperity seems endless and everyone feels richer. Stage 3. The system starts to buckle under its own weight. The currency's purchasing power begins to weaken, and you start seeing structural cracks appear throughout the economy. Things just don't work as smoothly as they used to. And finally, Stage 4. Before the collapse becomes obvious to the public, the original architects of the system start moving their capital. They quietly reallocate their wealth to the next rising economic power, positioning themselves for the next cycle. We've seen this exact pattern play out before. It happened with the Dutch Empire, and again with the British Empire. And it's happening right now in the post-1971 era that we're all living in. A similar massive shift of global capital is already well underway. Let's look at the British example to see how this works. In the late 1600s, Britain was broke from constant wars. They desperately needed money. Then, in 1694, they made a foundational change. They created a central banking system. This new bank could lend huge sums of money to the government, at interest. But the real genius was turning that government debt into currency that circulated in the economy. It was like magic, a massive stimulus that fueled incredible growth. But it came at a price. Public debt exploded. In just a few years, Britain's national debt jumped from £1.2 million to 16 million. By 1815, after financing huge wars across Europe, that debt had soared to an unbelievable £885 million. This was the clear signal that the British cycle was entering its final phases. Understanding this historical blueprint is key, because it shows us that the massive capital flows we're seeing today aren't random. They are part of a predictable centuries-old cycle of power and wealth shifting across the globe. By recognizing these stages, we can better understand the monumental changes happening in our own time. Thanks for watching. If you found this interesting, make sure to follow for more insights into the hidden forces shaping our world. Ever wonder how empires rise and fall? It's not always about armies and conquests. Sometimes, it's about money. The story of global power is a story of debt, currency, and capital flows. Let's start with the British Empire. After a major war, Britain was deeply in debt. So, it created a central bank, and institutional lenders didn't just profit. They became the primary stakeholders in the nation's future. With this new financial firepower, Britain built the world's most powerful navy and expanded its influence across half the globe. The pound became the global reserve currency. International trade was settled almost exclusively in sterling. But empires don't last forever. By the mid-1800s, structural cracks began to show. British industrial production peaked and started to decline relative to emerging powers like Germany and the United States. The cost of maintaining a global empire became too high, and debt started to climb once again. This is where the transition gets interesting. The very same financial institutions that built the British system saw the writing on the wall. They began quietly shifting their capital across the Atlantic, investing in American infrastructure, railroads, steel, and new industries. So, by 1931, when Britain officially abandoned the gold standard and the pound's dominance faded, the financial architecture had already been rebuilt in New York. The smart money had moved long before the official announcement. A perfect transition. This cycle of debt and currency devaluation isn't unique. Look at the Weimar Republic in the early 20th century after World War I. They faced a choice: raise taxes to pay massive reparations, or print money. They chose to print. The central bank started pumping out currency to fund social programs and maintain stability. By early 1923, the money supply was spiraling out of control. By November of that year, the currency was worthless. This hyperinflation served a brutal purpose. It wiped out all domestic debts and effectively destroyed the middle class. Once the crisis peaked, global financial plans were introduced, bringing foreign investment back to rebuild the system for its next chapter. Fast forward to the modern era. In 1944, the Bretton Woods Agreement established a new world order. The US dollar was pegged to gold at $35 an ounce, and every other major currency was pegged to the dollar. For over 2 decades, this system provided incredible stability. But just like with Britain, the system became overextended. The number of dollars circulating globally grew far beyond the physical gold held in US reserves to back them. Something had to give. In August 1971, the link between the dollar and gold was suspended, a temporary measure that is still in effect today. The dollar became a pure fiat currency, backed only by trust. Since then, its value relative to gold has fallen by over 98%. In 1971, an ounce of gold was $35. Today, it's over $3,000. It's the same pattern all over again. System overextension, a loss of monetary discipline, and the eventual transition of capital. So, where are we now? Many people point to July 6, 2018, as the start of a new era of economic tension, due to new trade restrictions. But something else happened that year that most people missed. Just 1 month earlier, major global investment indexes officially began including emerging Eastern shares in their portfolios. This wasn't a small change. It was a mandate, forcing trillions of dollars in institutional capital from pension funds to university endowments to be reallocated into these new markets. While the public's attention is focused on daily headlines and political rhetoric, the quiet, institutional transition of wealth is already well underway. The capital is on the move again, following a playbook that has been used for centuries. History doesn't always repeat, but it often rhymes. Understanding this pattern is key to seeing where the world might be headed next. Thanks for watching. If you found this insightful, please like, share and subscribe for more deep dives into how our world really works. What does this move signify? It means that pension funds, sovereign wealth funds, and insurance companies totaling trillions of dollars that track global indices fanatically began flowing into Eastern markets. The weight of these markets in global investment indices climbed from nearly 0% to over 40% to over 40%. Between 2018 and 2020, portfolio investments from Western institutions into these emerging markets reached an estimated $1.4 trillion. This all happened during the peak of international trade tensions. Major global financial institutions didn't just maintain their presence. They expanded their operations and increased their stakes. This was not an accident. It was the execution of a larger plan. Let's look at the current indicators. National debt is now exceeding $36 trillion. The debt-to-GDP ratio is sitting at approximately 98%. The central bank's balance sheet, which was under $1 trillion in 2008, now stands at over $7 trillion. The mechanism is operating as it always has. The central bank monetizes government debt. The government spends far beyond its tax revenue, and the money supply expands much faster than productive capacity. Consequently, the financial institutions that manage this system begin shifting capital to the next global power center. This is where we are right now. The public rhetoric of economic resistance often masks the reality of accelerated financial integration. It is impossible to effectively challenge a market while your largest financial institutions are reallocating record amounts of capital into it. You cannot maintain currency hegemony while running trillion-dollar deficits financed by liquidity expansion. This contradiction isn't a flaw, it's the mechanism itself. History shows that populations rarely recognize these shifts while they are happening. In the 1880s, many didn't realize their capital was building the next industrial giant. Today, as public attention is held by political performances, institutional wealth is building the financial infrastructure of the future. The pattern doesn't require public awareness to execute, it simply proceeds. So, what should you do with this information? Understand that the machine is already in motion. The current order of financial dominance is not permanent. We are in the final stages of a well-defined cycle, and the next phase is currently being implemented. Position yourself accordingly. Understand that holding assets solely in a debasing currency is a participation in this global transfer. Recognize that inflation is not a temporary glitch, but the inevitable outcome of monetary expansion. When you are told this time is different, remember that every historical system felt the same way right before its transition. The next 5 to 10 years will not resemble the last 30. The debt levels are historic and the currency shift is accelerating. The financial architects have already taken their positions. The only question is whether you recognize this pattern in real time. This isn't a prediction. It is pattern recognition. The mechanism has already completed a significant portion of its cycle. To see what happens next, you must understand how the system was built. The public often holds the currency as it approaches a reset, while the architects have already moved their wealth. This is the systemic transfer happening right now, behind the scenes. Subscribe to stay informed because this time you have the opportunity to see the transition while it is happening, rather than understanding it only after the cycle is complete. Thanks for watching.